Good afternoon, friends. Today we have released an initiating coverage on Mirza International. Mirza International is a leading footwear producer with nearly 40 years of experience in producing and exporting footwear, that is shoes, to 30 different nations spread over 5 different continents. Company has well established brand portfolio with international presence. The brands are Red Tape for men, Red Tape Gal for women, Oak Track and ESD. All these brands have strong brand recall. Company generates around 70% of its revenues from exporting to 30 different nations, and rest comes from domestic sales. Out of the total overall revenues, around 27% of the revenues come from the sale of branded products both in India and abroad, while rest revenues are coming from sale to the private labels. Company has good presence in European and US markets. It can out of the total exports, around 65% of the exports are made to UK, 5% to France, and around 10 to 15% from US. Exports has been growing at the CAGR of around 16% over last 4 to 5 years, while the domestic sales has been growing at around 12%. Both UK and US markets are next leg of growth for Mirza International. In UK, they already have a well established business. Around 25% of the total sales made to UK are branded, while rest comes from private labels, and they are in self-sustaining mode. As far as US is concerned, around 10 to 15% of the sales comes from US, and that is growing at a fast pace. For last 4 years, the US business has grown at a CAGR of around 80% plus, and the company is planning to ramp up its presence across US to tap the growing opportunities available. The company has well-equipped tannery with capacity of producing around 36 million square feet of leathers per annum, and recently that is in Q4 FY16, it has undertaken amalgamation with Genesis Footwear Enterprises, which was a company privately held by the promoters of Mirza International itself. The amalgamation has been done through share swap deal, and with this the ownership of promoters has gone to nearly 74% in Mirza listed entity, that is Mirza International. Earlier, Genesis used to sell footwear to Mirza International, which in turn used to brand it and sell it in the market. Now both this production and sale would be under same roof, and hence we expect the margins to build up going forward. The company is planning to increase its retail presence in India. Currently it has around 120 retail outlets spread over Tier 1 and Tier 2 cities. It has good presence in North India and is planning to spread its wings in South India. Company has around 50% retail stores owned and operated by itself, that is in company owned, company operated COCO model, while rest are managed under franchisee model. It is also restructuring its retail business model by closing down high cost stores in Tier 1 cities and opening up new stores in Tier 2 and Tier 3 cities. We expect the company to be a big beneficiary of shift of unorganized business to organized market. Footwear industry is dominated mainly by unorganized segment, which has around 80% market share. With rising brand awareness, increasing per capita income, we expect the organized segment to shore up its market share. In addition, with implementation of GST, we expect the organized player to be benefited, because currently the footwear industry has a tax incidence of around 22 to 24% on its product, whereas with implementation of GST the tax will fall down to around 12 to 18%, which is the standard rate, and hence the cost of purchase for the end users will reduce down sharply, which will help the user to shift towards organized branded segment than the unorganized segment. Well, on this basis, we expect the company to grow. We have penciled in the company to grow at around 13% on top line and 15% on bottom line over FY16 to FY18 period, and hence we have arrived at a price target of around rupees 96, which discounts FY18 earnings by 11x and gives an upside of around 36% over the current market price, that is rupees 70. That's all from my side. Thank you.